Hi, I'm Lon Shaver, Vice President with Silvercorp Metals, a Canadian mining company with a 17-year track record of profitable operations. We're a significant producer of silver, lead, and zinc.
Lon, good to see you. Good to have you back. I think we saw you back in July. Wanted to talk to you because it's tough times right now. It's tough markets. It's tough for precious metals. It's tough for equities more broadly. Geopolitical scene is a little bit crazy. But people with money have options. You have an operation which is throwing off cash at the moment. So how do you view your options?
Well, I think, look, as you said, it's choppy markets, and we look at what our valuation, the swing factors in our valuation recently, and what that means kind of for our mining assets. And we've talked about those mining assets, but it's important to recognize that in our market cap and our valuation, we need to get recognized for the fact that we have $216 million in cash as of June. And we have a portfolio of other investments. The most significant is a 28% stake in New Pacific, which is currently worth just over $100 million US. So when we look at these challenging times, we have cash that's really the fuel for growth to get into and acquire new assets and add more production elements to the story, diversify our cash flow base, both in terms of geography and type of asset. And then really with the participation in New Pacific, there's going to be a number of catalysts for their projects in Bolivia coming up, which we think is quite exciting for us and for shareholders in Silvercorp.
Right, but let's break that down, because obviously New Pacific are kind of getting on with their thing. You've got 28%, which is brilliant, of $100 million US company. But are they looking to you to capitalize them more in terms of their expansion?
Well, right now, and that 103, that's the value of our stake. So their market cap is roughly 3 times that in terms of US dollars. But going forward, they've got 3 projects. The flagship is one that a PEA is expected imminently. And then there's 2 other exploration projects that really have gone from nothing to significant discoveries over the course of 2022. They're going to end the year with $20 million in cash, go into 2023 with what's going to be some fairly sizable targets, both in terms of milestones on the projects and expenditures. So I would expect that we will have an opportunity to fund them again in 2023. Barring some other kind of transaction that could occur.
Right, but that's good for you. Is that good for them?
Well, sure. I think the catalysts that are coming up for them really are going to support their value and provide them with an opportunity to enter the marketplace, hopefully in more robust markets, and get access to capital to move each of the 3 projects ahead.
Right, but I guess in the sense of, if you're 28.2% shareholder now, does you increasing that level then make it more problematic for them further down the line? Would you do a different type of financing structure with them at asset level? I mean, how do you play that?
No, I think it's very clear that New Pacific have to govern themselves appropriately for all shareholders, not just Silvercorp. But the numbers will speak for themselves, and us and other parties, will assess what these projects look like. And I think the market, can or should know, we're not in a position here where we're looking to, interfere with the value creation at New Pacific, but rather participate in it. And if we end up being the party that ultimately puts a top dollar offer on the table, then that'll be great. If somebody else does, well, we'll just make more money than what we've made so far in that investment.
Okay. So, and what are the other options in terms of your current portfolio and where you allocate capital?
Well, really, there's some organic growth opportunities on our existing assets. Obviously, the mines in China, there could be some potential tuck-in and add-on acquisitions in China. But really, we've had a global outreach program looking at other assets around the world. And I think the ideal target for us would be that development project where the current sponsor is struggling with a tough equity market, has dressed up a project to make it look attractive to seniors and sell that to investors as being a takeover candidate, but the takeover is not coming. And where we see a bit of a diamond in the rough in that project opportunity. and where we could acquire it and deploy that cash that we have to get it going and built, and maybe not in the same fashion that they're currently thinking about it.
Right. We talked last time, I think you said something like, you looked at 30 you did 30 confidentiality agreements in the past couple of years. So there's a lot of people out there looking for money. The markets have got tighter, cost of capital's got more expensive, margins have been squeezed in terms of precious metal prices coming down, costs coming up. The universe that you're looking at has got smaller. Well,
I think we're still, the volatility we've seen has people looking at where the next money is going to come from in terms of funding the growth. And that's a question. And I think there's people who are eager to see that investments. But I think we're also looking at it from the standpoint that maybe given a bit more time, people's thinking will change, and it won't just be looking for investments, but more a view that it's actually time to do a bigger transaction, and that would be our preference for a target that we really like.
Right, and what kind of gives you the kind of competitive edge? You're sitting on a lot of cash now. You continue to generate cash, but you've not diluted shareholders for a long time, and I suspect you don't need to anytime soon if you don't do any kind of big M&A activity. But how do you win? Because there's so much M&A happening at the moment. There's a lot of deals to be had. Why would someone go with you? Or how would you structure your type of acquisition so you're not overpaying yet still be able to win?
Yeah, I think we have an opportunity in using our paper appropriately in a transaction. And if you look at some of these targets and where they're currently being valued, if they were to put up the sale sign and sell it for cash, that's it. You're selling at what is arguably not a great point in the market, and that's all the value you're going to receive from that participation from that investment. If you sell to a larger company where the shares effectively trade like cash, you won't necessarily see a big impact and benefit from that transaction. What we can do in terms of structuring a deal for one of these targets is, I like to think of it as kind of like the triple bump, in that the initial transaction can provide a lift in terms of what the company's current market cap is, and that's in a takeover premium. I think then when we demonstrate to the market that we found something that we like, and we can convey the confidence that this is going to be a great asset contributing to us, I think we get a re-rate in our share price. So that's the second bump that the developer or the target would receive. We're also not looking at targets that are going to be 5 years of permitting and construction to production. So if we can get something and we can get moving ahead quickly, the last bump that they would see is a further re-rate in our share price. And they would be shareholders of Silvercorp at that point in time, a further re-rate when we actually demonstrate that we're bringing this asset into production and starting to deliver cash flows from the asset.
Right. And in terms of that kind of profile, you described late stage or advanced development stage. But there's a kind of jurisdictional component because you've got China and Bolivia. It almost says to me that you need to be quite careful about the next jurisdiction in which you play. So you get a bump too, as well as the acquisition target.
Yeah, I mean, I that is true, and there's certainly countries right now that are more and less favorable. I think the one advantage in a portfolio, and you look at some of the other companies out there that have done well in what have traditionally been viewed as riskier jurisdiction. From your finance days, from portfolio theory, as you add uncorrelated assets to a portfolio, overall the risk of the portfolio goes down, and therefore the value and the return goes up. So I think barring going into somewhere terrible, I think we can look at some jurisdictions that are maybe perceived as maybe more risky than, say, Canada or the U.S., but really it's a great environment to get a license to operate, at the community, the local, and the government level to actually move ahead and get something developed rapidly.
Right. And then just looking at and the bit of the conversation I quite enjoyed when we spoke last time, well, there's a lot I enjoyed, but the area which I kind of come back to was when you were trying to hunt for M&A targets and you sort of see these wonderful economic reports, the number of those that actually stand up and are truly economic. I mean, I'm not even talking about the kind of inflationary environment we're in. I'm just talking about truly stand up in any normal kind of environment because the methodology is not always exactly as advertised. The resource is not exactly modeled as advertised. you're going to have your own views on that. Are there any kind of niche aspects to the way that you profile some of these companies and maybe allows you to get into projects where perhaps others might be put off? Have you got any sort of expertise or tolerances others might not?
Well, I think I think you've hit the nail on the head, in that a lot of the studies are written by people who don't have to live with their conclusions. As a mining company, and we've obviously built mines in China, and we're looking, through New Pacific at participating in the building of at least one, mine here. We have to live with our decisions. I'd say what we typically have been known for is going right back to the resource level and remodeling the resource. And I think what a lot of companies are doing, and again, this comes back to the argument of how do I make myself attractive to a takeover? It's take what is a interesting ore body or deposit, but maybe it's not big enough. So what do we have to do? Well, we've got to drop the grade and make it a bigger target with more ounces in it. Hand it over to the engineers to see whether or not they can engineer on paper an asset or a mine that works. We might take a different view. It's not necessarily the size of the ounces ultimately that matters. It's how much money goes in versus how much money comes out, and how quickly that money comes back to you. And that's really been the philosophy of what built the Ying Mining District. And when we look at these other projects, I won't say we throw away the other studies that have been done by other people, but we definitely discount them and say, well, we'll get to our own assessment of some of these other aspects. It comes back to the geology, and does that deposit give you potential for margin?
Yeah, no, I can understand. In fact, I sometimes joke with the guys in Percent on our app about when I was in banking. It was like I would do NPV 5, 6, 8, or 10 meant nothing to me. I would quite often do an NPV 40. Discount heavily what you're being sold, because you're going to go through tough times, good times and bad. Can I ask about your attitude to share buyback and dividends? Because obviously you want to. They each have a slightly different function. But in the context of going to try and adding ounces, that fulfills yet another function in terms of growth. So how do you view all of those things, and what weighting do you put to them?
Yeah, certainly our view on the cash is a balance. And I would say the dividend is right now, with where the share price has gone, the yield has become more meaningful than it was when our share price was higher. I'd say the dividend is meant to be symbolic of a company philosophy at the management and the board level, to basically demonstrate the intention to give shareholders a return. They need to participate in the profitability of the business. So that's the view on the dividend side. And at certain points, the board will make different decisions about whether or not to increase the dividend or keep it the same based on what these other targets are. Share buyback, that's meant to be really an opportunistic program, where when we just see an egregious mispricing, an opportunity to pick up shares, that's where we'll step in and we'll do that. And we've done that a little bit this fall based on the market trading. But it's not intended to be a case of, shrinking that green box to nothing, shrinking the shares outstanding, but then really not having the fuel to grow and to build the business. So that's what we're really looking to preserve that cash for, is to have that available to build the mining business with new attractive mines.
Right, and I know you've talked about potentially needing to look at doing bigger deals or to get noticed, right? Because doing lots of smaller early stage projects are probably not going to move the dial if the conversations I've had are anything to go by. Who and where do you go and seek partners for capital, whether it be raising debt in the marketplace? Again, you clearly kind of got the whole Chinese thing going on there, and people are going to have a view about their risk tolerances for that. We've heard in the battery metal space where companies are being refused capital by Western banks because of the China connection. That started to happen with battery metals. For you guys, I know you're Canadian company, Canadian gold company, but are you getting any kind of signals like that in terms of your ability to go and raise that debt when you need it?
No, I don't think that that's really an issue. I think that's going to come down to what's the opportunity that we're presenting to the investment community, and I think that's going to obviously we're unlevered, we're completely unlevered, and we could lever up at the asset level, based on the strong operating performance and the cash flow, and that would be the ability to really tap into a market that other people couldn't. That is the China debt markets. But the other things that really apply is when we come back to either the lending community or the equity investment community with a new opportunity. And again, hopefully on the back of demonstrating what's going to be a solid asset that leads to a re-rating, I think we have a number of options open to us at that point. But again, it'll be driven by what that opportunity is and what we can articulate to the markets.
Right. And what goals have you set yourself? Obviously, operationally in China, I get it. I think in your presentation, you talk about various catalysts and so forth, whereas it seems to be predominantly around operations and permitting and the drilling, etc. But what goals have you set yourself as a company in terms of the kind of growth element? Clearly, acquisitions are a big part of that. But have you set yourselves deadlines? Have you set yourself deliverables? I mean, how do you judge yourselves?
Well, I would say that is, that's different. If you look at each of these three boxes, we've got the existing assets. We've set a target to have a new mill operating, and that will allow us greater operational processing capacity. And we're going to grow our production up to meet that. Either through our existing mines, new mines on our concessions, or some tuck-in opportunities. And that's really just sort of a steady as she goes type program. New Pacific's catalyst will be driven off of what's going on with them and whether or not we're, in terms of when we're participating in either a transaction or a financing. As it relates to the other targets that we might go after. I mean, really, it's a stair-step approach. We can't come to you and say we're going to do 3 deals and be 4 times the cash flow that we are now. I think it's going to be, let's find that next deal. We know that will be important to the company. It will need to be important for us to do it. If we're acquiring an asset, we need to see visibility, ideally on sort of that 40 to 50 million of free cash flow a year type opportunity. That's really what we're looking for. If it's a bit less, but a great asset and maybe a starter project, that can work. Do that one. Know that that's going to be a big project for the company. Get that down, embedded right, and running right. And then I think with that and a re-rate and a beachhead in a new market, we can build upon that and do further transactions.
Okay, so what would you say to shareholders or anyone kind of looking in? And the reason I ask this is because I wondered what your pitch is to investors, because I've seen it's a good PowerPoint that you've got. You can run through a few things, but you talk about a compelling value for profitable and growing silver producer. Like silver producers are under a lot of pressure at the moment. So what is the compelling component there for you? Well,
I think what we offer is a bit of an insured approach to participating in precious metals, given the fact that we can make money at current silver prices and even lower. We've shown that. And so we do provide the opportunity to participate in that metal market. But then with the other catalysts, in terms of New Pacific and also what we can do with that cash, can really unlock the value of another asset. That is the growth opportunity. So, right now we're clearly a value play with that precious metals exposure. And it's a case of looking at the track record and saying, trust us, when we do something, it's going to be something good.
Right. Okay. But if I look at your register, right, you've got a lot of institutional guys in there, but they're not holding a lot, right? So in total, like 35% of the register is institutional. And for a company of your size, do you feel that you need to address that? Or do you think you've got the balance right?
Yeah, no, we are under-owned institutionally. And I think it's a case of getting out with this story and getting in front of investors and potentially also the non-mining guys, because the mining guys are full up with all of these stories. I think what we have to go and present to non-mining guys, say, well, do you have any precious metals exposure in your portfolio? You can buy this company at this valuation. or you can buy Silvercorp at a much more attractive valuation, participate in this market that you don't have exposure to, and also participate in the growth profile that we can offer with these other assets, both in terms of the investments and then the cash that we can deploy in those investments and in new opportunities.